So, Mike, how often do you run across this, that people's credit scores are just killing them with DSCR?
Oh, we see it a lot. Being in the hard money business, we have flexibility. So we see the clients that need their credit score fixed before they could either get a good DSCR loan or a DSCR loan in itself. So a lot of people are being declined. They just miss the numbers. It's amazing how many people are just 1 to 10 points away from either getting a loan or getting better terms.
Yeah, just that little bit of difference in a credit score can either be can mean that you have a worse rate or that you just don't get the loan at all, right?
Yeah, welcome to the computer age where if you have a 699 and you need a 700, you get totally different terms.
They draw that arbitrary line, and it's like if you fall on one side of it, it's like, nope.
But typically our clients are more like they have 640 and they need to get the 740. It's typically they're in the low 600s, and it's all because of usage. I mean, the biggest thing that we see is because of credit score usage.
Gotcha. And you can bring it up that much. You can bring it up from 640 all the way into the 700s.
Yeah, I mean, there's people who do that, but we always require them go and do a simulator that shows exactly what they can do. Let's go into MyFICO, Experian, Credit Karma, one of those, and you get put in like, hey, if I pay off this credit card, if I pay off this credit card, if I pay down this credit card, what will happen with a credit score?
Okay.
And the beautiful thing about a usage loan, when you're looking at a DSCR, is how quick they can impact your score.
Mm-hmm.
Most investors have used their credit cards to do either by personal stuff, by information to get better, training, or they put their rehab budget on their credit cards, their personal credit cards. Drives up their balance, drives down their score, basically putting them in a position that they're going to get higher rates, declined, or just worse terms.
So if we simplify this for me, sometimes I need it.
I hear you.
Basically what you're talking about doing is addressing the part of a credit score that's usage or utilization rate. Like you're paying that down with a new loan, and that will boost their credit score pretty quickly. But you do have to make sure that'll be the case by running it on a simulator first, like MyFICO or Credit Karma.
The whole thing here is to get them into a better long-term loan.
Gotcha.
Or get them into a long-term loan. Their credit score is such a huge part of that. DSCR is credit score on your part and then income on the property. But if your credit score doesn't work, it's going to impact your income because you're going to get a higher rate. Maybe a higher rate where you don't qualify now. Maybe it goes above break even. So we go in, we do a private loan, pay off all or part, whatever the simulator says, of your credit to get it to the credit score. And what happens is every time you pay off all your credit cards, pay them down, the next time they cycle or next time the statement comes out, shortly after that, they report to the credit bureaus. That's when it impacts your score. We've had a client in Detroit in 2 weeks drop 2 interest rate points on his DSCR loan. Went from 9 point something to 7 point something.
Dang, that's a lot of money for him.
2 weeks because he paid it off. His cycles just hit perfect. And he was able to get a really good long-term rate. We see people who go up 100 points. We see people only go up 20 or 30, but that's all they need. If you want 7.5 instead of 8.5 on a 30-year loan at $400,000, that's a big impact.
Yeah.
Or if you don't want to put 10% down more. I mean, we see it all the time where you're at 640 and you're going to only get a 70%, or 700 and you're going to get an 80% loan to value. That's a lot of money either out of your pocket to buy it or less cash if you're trying to cash out. 7 out of 10 of the people we see in investors have a usage problem on their credit because they're using personal credit instead of business credit. So we fix that one little issue, their score goes up, everything else falls in place, and they can get the loan. And it's quick. It's not like, let's do this in 6 months, let's come back and see what happens.
It's funny. I'm imagining you as like Hard Money Mike is the credit score doctor who he offered you preventative medicine in the first place. He said, get a business card instead. Yep. But you were like, no, I'm going to do my personal card. And he's like, fine, we're going to do some surgery.
Yep.
I've got you. And that's what the usage loan is.
That's basically what it is, because we go through this with people. It's like, once we do the loan, once your credit scores goes up, you get the DSCR, move it over to business credit cards. But people just get set in their ways. Even though business credit cards are just the same credit cards on your personal side, just in your business name, but they just don't show up on your personal credit. So you could go out and take that training classes, you could do the rehab, and it's not going to affect your score. There's certain things you could do to make this easier. Set up your LLC, get your business credit cards, make sure your lenders are in line to make this not only easier but more profitable. But some people just want to keep going down the path of using personal credit cards, and that's what a usage loan helps with.
Gotcha. And it sounds like you've seen this a number of times now. You've been able to pay down their credit cards, and so credit score goes up, and then their interest rates go down.
Correct. Yep. Interest rates go down, terms get better, which means their loan to values get better.
Yeah.
They actually get into a property because the property didn't qualify at 8.5%, but it qualifies at 7.5%. Once again, we've talked about this is building wealth. You got to start accumulating assets. And you got to accumulate them at the best rates you can. And your credit score is so important.
Would you recommend this? I know this might not actually be your demographic, but would you recommend this for people that just let's say they had a rough go at it and they just can't get their own apartment? Let's say they have like a low credit score or something. Is this a strategy for someone like that, or is it more for investors?
Well, we work with investors and business owners and people like that. We have people reach out and it would help them. We just can't do loans for them.
Gotcha.
But it would help anybody and everyone. And we see people who have maxed out $3,000 to $5,000, and we see people who have maxed out $250,000. There's all kinds of shapes and sizes that do this, but it impacts them. We help business people who are trying to get into an SBA loan, and there's a minimum credit score requirement.
What's that, SBA loan?
Like a small business. It's the government, loans that help small businesses. And they're trying to get in. They have a credit score minimum for their bank or the SBA. And so this is another case where they got to pay those things down, get their score up so they can get the SBA loan. It's like this chicken and egg or whatever. Like, if I get the refinance, if I get the SBA loan, I'm going to use that money to pay off my credit cards, and my score would go up anyway. But the banks or whatever don't care. DSCR lenders are like, no, we need the score now to reflect that. We can't reflect it after you do the refinance. Maybe someday that'll become a product out there where they'll take that into account, but right now they don't.
Okay, so for now you need to go to Hard Money Mike, the credit score doctor.
Yep. hardmoneymike.com. Reach out to me at Mike at Hard Money Mike. We'd be glad to run through a scenario, and part of that scenario is you doing the work yourself up front to make sure it gets you to the credit score you need. And then as long as we have a property to secure it, we could pay off those debts. We could be in second or third position, pay off those debts so you could get that DSCR loan, that SBA loan, or whatever it may be, to make sure you qualify and keep growing.
It sounds like good work. Yeah, it's certainly helping, small business owners, I imagine.
It's amazing how many people, I just talked to a lady yesterday, has 3 clients we're putting them through. All 3 of them are stuck in one form or another. And the beautiful thing is in 30 days, they'll be unstuck. And that's a couple of them, it's been since last November or October, they've been stuck in a property. And they're trying to figure out how to get out of it because their scores. So we're going to actually help them finish the project and pay down the credit cards to get their score up. We're hard money. We do a lot of different funky things as long as there's a property there and we can make it work. We'll get them into a position where the property's in a good position, their credit score is in a good position. They can refinance, they could get on to the next project. A lot of these big lenders, even in fix and flips, need a better credit score.
So hardmoneymike.com or Mike at hardmoneymike.com is your email?
Got it. Yep.
Cool.
Thanks, Michael.